Hello, crypto friends. Here, the last day in Iceland. Check out these curtains. Pretty sweet. I want to reflect a little bit before we get into the technical side of things. We're going to look at Bitcoin, Ethereum, Litecoin, and Nano. Nano's showing up for the bulls. But before we get into that, I want to reflect a little bit about Iceland and one thing that I really like about their country, and that is the fact of how they responded to the 2008 financial crisis. And that's by putting people in jail. They are one of the only, I think the only country that actually did jail bankers for their roles in knowingly contributing to the financial collapse and the essentially almost the global financial collapse that we did see. And back in another life of mine, before the chart guys even existed, I haven't even shared this with anybody. And the reason I haven't shared it is, number one, due to the misconceptions that the media spun, and they did a really good job of doing that. And number two is it's definitely some political based stuff, but if anyone were to be receptive over it, it would be the cryptocurrency space. But I was a very active member in terms of the social upheaval and social activism surrounding the bailout in 2008. So essentially what happened, just the short nutshell version, is we had, greedy bankers unknowingly and just being really dumb, and the whole housing crisis. We could go into that for a long time. Before I get into it, let's highlight some movies. If you want more information here, The Big Short, great movie for information. Inside Job is a documentary that'll give you a lot of information as well. And Too Big to Fail is another one. I highly suggest watching those three things because it opens your eyes in terms of what actually went down. And again, it's not something that the media is going to tell you. You have to dig into this yourself. But essentially what happened is the financial collapse happened. We had the bailout. So essentially the federal government printed $13 trillion, $15 trillion, whatever, out of thin air. And then we used that money to pay these banks to allow them to continue staying in business without collapsing. We pay that. The taxpayers have to pay that money. It's added to our deficit, and we have to pay that back. So essentially, we were bailing out these institutions, and with that bailout money, these bankers paid bonuses to themselves and bought jets and did all kinds of further irresponsible things, and that was just rubbing salt into the wound at that point. But it was the kind of thing where the general population didn't understand what was going on. So while we're out on the streets trying to bring awareness to this, the media is spinning it. So, they're making it about something else. And the amount of times that we heard go get a job and literally had eggs thrown at us when all we're doing is trying to make people aware of what's going on and how we're being taken advantage of by these systems, it was just astounding to me. And it honestly made me lose a lot of hope for the current structure of our government and the structure of the way that these banks have such a strong hold on our government. And it was a bit disheartening in that regard. But again, it's very important that we go inside and look at all of these facts and details of how it played out. And it's the number one reason why I do not trust our financial institutions. And it's the number one reason why I am a day trader. I do not want my cash in anything overnight. I will never have, long-term portfolios that I just let sit in stocks because we are a house of cards, in my opinion. All of our financial institutions can just see flash crashes and collapse, on a whim. I have no trust in our government and our financial institutions. So I want to be, and again, I say I'm all cash, and that gives me a certain extra layer of safety. But a lot of people in the cryptocurrency world are anticipating the dollar to see weakness as well. And if that is the case, I will certainly move my funds into cryptocurrencies and other assets that are not subject to the potential dollar weakness that we may eventually see. At this point, the dollar is still very strong. I'm watching it daily, and it's not something that I feel is going to just collapse overnight. But it is something that we're going to be keeping a close eye on because, again, lack of trust. That's my biggest reason for staying very liquid and being able to move around my assets. And being that liquid is the reason that I was able to get into cryptocurrency and Ethereum in the $50 range, because I was able to move my funds. It only took a few days to do that. And that is what allowed me the ability to profit on the entire cryptocurrency space. So I have a whole bunch of content. It was during one of our road trips when this Occupy movement was going on, and I went city to city and visited at least 8 different Occupy movements around the country, and the people in those encampments were just absolutely brilliant, and they had great ideas, and we were having nightly discussions, just sitting around for hours talking about the way things are and the way things that we could improve. And of course the media spun it to be something that it was not, and the movement was co-opted by whoever else. And again, very disheartening to see. And honestly, I have to reflect on that multiple times because I have a sense of despair about our government and our financial institutions from this experience. And, you know, so when people talk about voting and people talk about, I definitely have a sense of cynicism around it. And I definitely try and combat that as much as I can and get my head from that negative space. But just a little bit about myself and history with the financial crisis in 2008. So again, to tie it all back, Iceland, good job putting the bankers in jail and making them, you know, have to pay for what they did knowingly in terms of costing a lot of people a lot of money and hardship. And that is, there's actually a tour here in Reykjavik where they go around and talk about how it all played out. And unfortunately, I don't have time to go see that, but I would be very interested in it otherwise. So on to the charts. Bitcoin, daily inside bar currently forming. We're either going to see it today, it's pretty much either a bull break or a daily inside bar, the way things are currently shaping up. By the way, it's just before 7 a.m. Eastern right now. And we're watching a 4-hour equilibrium that did just break bullish, but we don't have a lot of follow through on that bull break. And this is the kind of scenario where I see on Coinbase, the level to break was 65.45, and we got up to 65.50. So then I look at all the other exchanges. I looked at Binance and I looked at Bitfinex, and I saw they saw a bull break as well, but only by a few dollars with no follow through. So we have to take that with a grain of salt. And at this point, if we were to lose the 4-hour higher lows without being able to see follow through, that would be a red flag, and that would make me more confident that our daily lower high has been set. The bulls do not want our daily lower high to be set just yet because we have not made our way to the midway point in this equilibrium, which is about 67.50. At this point, we've only gotten up to 65.80. Fairly close, but still about $170 shy of that mark. So the bulls do want to see continuation here. Look at the exponential moving averages acting as support. The 12 period here has held the last 7 candlesticks in a row. And again, as long as we can hold this support level, let's mark it down here. That's at 64.68. And we are looking to maintain that level to give the bulls chance for continuation. Again, if we fail to hold this support level, the odds that our daily lower high being set will increase pretty significantly. We can also look at the hourly time frame. There's a little double bottom at that level and essentially a triple bottom, and that would be, again, more significant if those levels broke for the bears. So that's what I'm watching today. The time frame that I think is the best for clarity right now is the 4-hour time frame to see if we can maintain the higher lows and the exponential moving average support. Ethereum on the daily time frame, also an inside bar, pretty much a potential bull break or an inside bar is the most likely scenario. We have the exponential resistance on the daily time frame, and let's look at Bitcoin real quick. The exponential resistance on the daily time frame being tested for the 3rd day in a row, and here on Ethereum, essentially the 3rd day in a row, but 2 days in a row that we're actually touching it. And we go to the 4-hour and we compare. I've got a mic setting right now that's kind of blocking my view a bit, but we've got equilibrium still in play. So right now, the most important support level here, 208.26, and key resistance is 221.43, and we may be setting a lower high. And here's our declining volume for 4 candlesticks in a row, very common pattern with our tightening equilibriums, and we're going to be watching for the direction that we do get this break. No fake out here on the Ethereum break like Bitcoin has, as we have not broken the lower high pattern just yet. Really nice tight 4-hour pattern that we will see a break today, very likely. Exponential supports holding here as well, and the hourly support levels, if I want a little bit more detail, there are a couple more here, 211 and 210.24 before the must hold level of 208.26. So very similar setup to Ethereum, just some slight differences, or very similar to Bitcoin, I should say. And we're going to be watching this 4-hour pattern for the direction today. As far as the daily chart goes, we're not close to changing any kind of trend. This bounce is coming straight off the low. And as far as lower highs are concerned, I would pretty much consider our last daily lower high at 302.20. Still way up there. You could, you can make the argument that 234.23 is that level. But for me, it's that level up there in the 300 mark. So as far as changing the trend on the daily and weekly time frame, not close to happening here on Ethereum anytime soon, and it's much closer to happening on Bitcoin, which obviously if Bitcoin were to break bullish from the weekly equilibrium pattern, we would anticipate Ethereum to have some follow through as well. In the fundamental side of things, Ethereum does have a lot going on, so you want to be keeping up to date on that. Not going to do that in this video, still working with some rough internet, so don't want to get things too long here, but back home, let's see, Sunday, and I will be back to normal internet and normal upload speeds. Checking in on Litecoin. Litecoin played catch up yesterday and made a bull move that had us looking to play catch up to where Bitcoin was. And so we look at Bitcoin on the 4-hour time frame, and we have broken to the top of the initial bounces here and broken above that level by about $50 or so. And we look at Litecoin, and before this catch-up move, and I say catch-up move because look at this 4-hour time frame, this is where the equilibrium on Bitcoin and Ethereum is forming, where we would have set a lower high here and then pulled back for a higher low. Instead, we saw a clear bull break and significant follow-through. So yesterday, the most bullish opportunity out of these 3 names so far was on Litecoin because it played catch-up, and we see the high of the bounce that Bitcoin had already broken $50 above, and we double topped with that level. That's at 58.93, and we got up to 58.90 here on Coinbase. So definitely still a resistance level to be watching, but much closer to seeing the same setup with Bitcoin, even though the bounce on Litecoin from its lows is a much more significant gain. So nice follow through, nice bull break, and our 4-hour higher low here is at 56.05, and it looks like we're starting in equilibrium now with a lower high and an upper wick forming comparative to 58.90. It's just a bit of a different setup than the other 2 names because it is not as developed, whereas we would already have a higher low on those other 2 names and already be looking at another potential lower high, where essentially one peak behind on this 4-hour time frame for Litecoin. So it's essentially the same tightening range to be watching, but coming from a different point with that extra strength and bull volume spike that we saw yesterday, hourly time frame. And again, these hourly time frames for both Ethereum that I highlighted in the last video and now on Litecoin, these big volume spikes that stand out on the hourly time frame lead to consolidation. Those are little mini volume climaxes, and you can see, just look at the green candlesticks where we see significant volume, and look what follows that action. We see, 4 or 5 hours of consolidation, 7, 8 hours of consolidation after the volume spike, 2 hours of consolidation, and now another significant dozen plus hours of consolidation. So keep an eye on that volume. Again, it's my #1 indicator that I use. It's the prove it indicator, and it very often gives lots of signals, and that's why we utilize that in the alert system, not only for abnormal volume alerts when we see spikes above the average over a certain period of time, but also in combination with the RSI. Definitely volume is one of the most utilized indicators that we use on those alert systems, and it has come in handy for that Ethereum bounce when it signaled in the 180s on that daily oversold climax. Again, that's volume and RSI that alert does take into account. Nano, very significant 4 days in a row. And again, we're looking at the weekly time frames on all these altcoins, and we're separating them with their strength. There are names that are still holding a potential weekly higher low, and there are names that have already broken to a lower low. So Bitcoin is still holding the potential higher low on its weekly, whereas Ethereum, Litecoin, Bitcoin Cash all have broken bearish. And actually wanted to pull up the chat room here because we do have some names here that I just highlighted where weekly lower lows, I'm looking at OMG, ZRX, ICX, and BAT for weekly lower lows. So those are the weaker of the altcoins, and names that still have the higher lows intact. Over here on the right, we're looking at all these names. So a pretty significant list. Binance, Dash. Dash is a really nice equilibrium that we're still watching on the daily time frame. I'll look at that in just a second as well. But if you want to pause here and check out all the names that still have a weekly higher low potential, and then the weekly lower highs, not as many, but very clearly standing out as weaker names. So let's look at Nano right now. The weekly higher low is trying to form at 159, and that is our new support level. Solid bull volume behind it. Have to see a break of 385 to change the weekly trend. We broke the lower highs on the initial bull move up. Now we need the higher low and then continuation, and the volume profile is looking pretty good for that to follow through right now. Increasing bull volume on the initial move that broke the lower highs. I'm looking at 318 here as a lower high that broke. Declining bear volume on the 2 weeks of consolidation, and now increasing bull volume on the attempt to see that continuation. And we see the daily time frame getting a little extended. We're still likely to see a daily lower high here. I'm looking at resistance of 325.5 as the next level to be watching before we get up to 385. And again, just because the fact that we've seen 4 big green days in a row, it's likely that we're going to need a lower high compared to 325, a higher low, and then a break of the lower high pattern on the daily to try and change that daily trend to have us looking at the weekly potential for continuation. So definitely worth watching the correlation with Bitcoin here, but the bulls in Nano have been able to shake off that correlation in favor of the bulls recently. So a couple higher lows to be watching. The last clear 4-hour higher low is 226. The bulls must maintain this level in order to remain in control. And we just had an inside bar break bullish on the 4-hour time frame at 266. Made it all the way up to 277 from there. So nice little bit of follow through. And we do have a little bit of a double top as well. So a tightening 4-hour pattern, similar to what we're watching on these other names. but there's not really a clear support level as well. We don't have that clear distinct higher low because every 4-hour candlestick has been forming a higher low for the last 6 candlesticks in a row. But a clear double top of resistance, 2778, 2768, and we are looking to see if we're going to need to pull back. We have the exponential supports to be watching here as well. So correlating to the rest of the names, including Bitcoin, in the sense that the 4-hour chart is consolidating, but also a little bit stronger, the fact that we did get all the way back up to the high of the move at this point. So let's keep an eye on Nano and see if we can get another leg to the upside, but keeping in mind that the daily chart is likely to set a lower high compared to 325 and need a higher low of healthy consolidation after that. But as far as the altcoins that I'm watching, Nano is definitely one of the better ones, and we did have somebody comment on one of the videos to point that out, and then of course chat room members pointing it out as well. Keep an eye on Dash. We have Dash multiple daily inside bars forming. We know we have an equilibrium. We've been watching this for about a week or two at this point. High, low, lower, high, higher, low, but now we have inside bars. So how these daily inside bars break is going to be our first signal to shift the odds and how this daily equilibrium is going to break. It's not going to be a clear signal. We're going to need to see follow through. So let's say we are looking at yesterday's inside candlestick, and it's pretty likely we're going to form another one today. But let's just look at yesterday's. If we break 199.48, that's an initial bull signal, but we need to see a break of 206.26 for that confidence and follow through. If we get a bear break of 185.70, we need to see a bear break of 170.44 to get that confidence and follow through there as well. But I do believe we will have even a tighter range to be watching here on this daily time frame tomorrow. And you can look at the 4-hour chart, the range I'd be watching on the 4-hour chart for more details. High, low, lower, high, just holding support down here. So support is 186.85 and resistance is 196.50. That's the tightest range to be watching. So depending on how much risk to reward you want on your trade, you're either looking at the 4-hour time frame, you're looking at the daily inside bars, or if you want to have the least amount of risk but also the least amount of reward, you're waiting on the more clear higher low and lower high that we saw in this tightening equilibrium pattern. So that's another key one to be keeping an eye on. Should see some trading opportunity in the next couple of days there as well. The volume is dropping off, and we should see a volume spike on both. Pretty much should see a volume spike on everybody once these 4-hour equilibriums get some more tightening follow through, or some more follow through on the break after these tightening ranges. So that's where we stand as we head into tomorrow. Have to be watching for the potential of these daily lower highs. We know it's going to be coming eventually, but not having enough clarity just yet. If these 4-hour equilibriums break bearish, we'll be more confident that our daily lower high has been set. And if they break bullish, then we clearly are not done yet for the bulls, and we're going to try and make our way to the middle of that Bitcoin weekly equilibrium range. The closer we get to the end of September and early October, the closer we get to the break of that weekly equilibrium, in my opinion. So I hope you all are well, and let me know if you have any interest in more of that broader economic. I mean, I guess you've already expressed that you have interest in the broader economic things. Let's look at the dollar real quick. Started the day with the dollar discussion. Weekly time frame. Again, it's been recovering. We've been pulling back all 2017 into 2018, and now pretty much all 2018 we've seen some strength. But we do have the potential here to losing the weekly uptrend. And technically, I would consider us already having broke that uptrend. When we broke 94.43, we dipped down to 94.36. Not a significant amount of follow through for the bears just yet, but this is a shift in momentum now. We had a double top up here at 95.71, 95.74, and then we broke to a lower low. So let's now see if we see another lower high compared to 95.74, and then drop down and see a more significant bear break of 94.36. If we see that follow through, gold is likely going to see some upside because gold is generally inverse to the dollar, which means gold miners. Again, check out the videos, search on our videos for intro to gold and miners for ways to play that space with ETFs and leveraged ETFs that offer lots of opportunities. And if the dollar starts to see further weakness, and now that I'm coming back from Iceland, I will welcome that, we are going to be looking for the gold and the gold miner bulls to potentially see a little bit of upside. But again, need another leg down on the dollar to be confident in that weekly shift back to the bears. And it would be the first bear break of this uptrend since right when we started 2018, pretty much February. So that's what we're keeping an eye on the more broader things. The market as itself, the S&P 500, still in absolute full control of the bulls. The strongest close ever this past week, still up at those all-time highs. And there is no sign of weakness. In my opinion, the tech sector is very clearly the highest weighted sector. The financial sector is number 2 in terms of the S&P 500 weightings. But essentially, if the main Tech sector names, Apple, Amazon, Netflix, Facebook, Google. If they are not seeing significant weakness, the market is not going to see significant weakness. And again, house of cards scenario, the tech sector is the bottom card. You pull out the tech sector and the overall S&P 500 and the market itself is going to see a lot of weakness. So as long as those tech sector names stay strong, so does the market. You can't really have significant market weakness without significant tech sector weakness. Always keeping an eye out for it. A lot of fundamental traders have been looking for a collapse and looking for a top for the last 5+ years. I am not in that school of thought. The will tell us when we have weakness, and we had weakness and a lot of fear back to start the year in February, and then we had a beautiful equilibrium. And so if you are comfortable with technical analysis, you can just say, all right, well, I can be watching this equilibrium. If we break this equilibrium bearish, I will absolutely trim, long-term holdings in my retirement account perhaps. Maybe I'll hedge a little bit by going bearish and playing the volatility index, VIX, or, there's all different kinds of ways that you can trade it. But I guarantee you, people that did not know technical analysis had a lot more fear during this pattern from February through April and May than people who do know technical analysis. And we're just patiently watching the standard equilibrium pattern that we see time and time again. And as soon as it bull broke, that was a signal, back in April and May, we were saying many times here at the chart, guys, break this weekly equilibrium bullish, and we're looking for the market to hit new all-time highs, perhaps Q4 2018, and it did so a little bit earlier than that. So always watching everything in the markets. I appreciate you watching. Hope you continue to do good things out there. Looking forward to getting home and editing some Icelandic content. Got some stock humor and some sheep humor and some nice scenery coming your way. See you soon.